All right, now we get to the exciting stuff. Regulation and bureaucracy. Woohoo! I can see the excitement in the room. Let's see if I can figure out how to work this. Insurance regulations, of course, are very complex and extensive. But even beyond the insurance regulations, of course, there's all sorts of regulations of businesses that you have to deal with in any event. Actually, before I get started, I just wanted to say, in case you hadn't read my background on the agenda, I used to be the insurance commissioner for the state of Hawaii. I'm an attorney, and I've advised the Ethereum Foundation on corporate governance and regulatory affairs. So just a little bit on that. But as I say, there's all sorts of regulations that, before you even get started into the insurance regulations. And we've seen some of that with the SEC stepping in and talking about whether ICOs, whether tokens are securities. Money transmitter laws have been a problem for currency exchanges. And IP, corporate structure, there's all sorts of issues that beyond just the insurance regulations. But once you get into the insurance regulations, there we go. Because of all of the increase in value of tokens and ICOs, the insurance regulators have started to pay attention. So far, they have been kind of sitting back and just waiting, and there's very little that they have done and very little that they have spoken about on how they view the blockchain and cryptocurrency. But as I said, they're now starting to pay attention, which is a good thing. They need to. And a couple of areas that are important to know is IAIS is the International Association of Insurance Regulators, Supervisors, and NAIC is the National Association of Insurance Commissioners for the United States. And these are groups where all of these regulators get together and they try to develop model laws. And it's important because with these groups we can educate a group of them as opposed to going person by person to the regulators. Now, it's probably going to have to go person to person to the regulators in any event, but there's going to need to be a lot of education of the regulators in the blockchain area. And these are a couple of areas that are a good place to start. You may be aware that the Uniform Law Commission did do a model law on licensing that is fairly good. But one thing to keep in mind, of course, is that the model laws are very good from a standpoint of persuasion, but they really don't have any effect until a particular jurisdiction enacts it into law. So unless you can convince a particular state or a particular country to enact a law adopting the model law, it's not going to apply and be effective. But they have persuasive effect. Before you even start interacting with the regulator, you got to consider your approach. You can have an adversarial approach, and you can get a call from the regulator, and you can say, "Geez, I'm too busy. I don't want to call that doofus. He doesn't know anything." And I urge you not to. I urge you to resist that temptation, because they need a lot of education, as I said, and it's much better to take the approach of educational, working together to find solutions. And as I said, there's going to need to be a lot of education of these regulators. Now, with the adversarial approach, you may find that there are regulators who actually take an adversarial approach to you. You know, as insurance commissioner in Hawaii, I'd go to the NAIC, and some of the insurance commissioners and the staff would actually refer to insurance companies as the dark side. And I always felt that that was not a good approach. I wanted to, again, work with insurance companies to find the best solutions for my consumers. But try to work through that and let them know that the fundamental structure of blockchain is going to address a number of the problems that they have to deal with every day. So the basic structure is going to help them because of the transparency, the security, the privacy, immutability. These are things that are going to be helpful. There's going to be various areas there where they need to be tweaked, as some of the speakers have said. Where privacy needs to be adjusted, security may need to be adjusted in order to address certain regulators' concerns. And the laws, the end result, the laws that they're looking at, we want to work towards adjusting those so that they better address the issues for the blockchain community. All of the laws currently are based on regulating traditional insurance companies, and most of them really don't fit well with the blockchain process. So they're going to have to, the hope is that they will be adjusted and revised so that they better address the issues involved with blockchain. Main concerns for insurance regulators, in order to persuade anybody, you want to know what their main concerns are going to be. Capital adequacy and business conduct are the main concerns. Capital adequacy is the #1 concern. They want to make sure that there are sufficient funds to pay claims as they come due. They're also concerned about the corporate structure, concerned about whether it's commercial or personal. Commercial is going to have less regulation. They feel a greater urge and need to protect consumers in the personal lines. Business conduct is where you get a lot of these regulations designed to protect the consumers. Regulations regarding proper marketing, sales, contracts, rates, practically every aspect of the insurance industry. With capital adequacy in the United States, you have rules-based requirements for reserves and surplus capital. EU is more principle-based. IAIS, EU has Solvency II. IAIS has various models, insurance core principles, ComFrame, and then there's systematically important insurers network for the very large insurers. But basically, the statutes are going to require, if it's an insurance company, the statutes are going to require a capital deposit, maybe $2 million or so. And then as the business grows, they use these various methods for determining what the risk is for that company as they get more and more customers, and determine how much they need for their reserves and surplus. As was mentioned, reserves and surplus is only a fraction of what the maximum payout under the coverages may be, and so they go through actuarial calculations, try to predict what the risk is going to be for the particular insurance company based on coverage they're providing and the customers that they have, in order to determine how much capital they need. Now, one of the areas that is going to be an issue with regulators is regarding regarding tokens. For these reserves and surplus, it can only be a certain kind of asset. It's got to be a very conservative asset and liquid asset. Tokens are liquid, but for a lot of insurance regulators, they're going to be too volatile to be considered an admitted asset. On the other hand, for the companies that you want to set up, the structure that you want to set up, often you're going to want to issue tokens, and the tokens are going to be a part of your surplus and reserve, and you're going to want to pay claims with tokens. One interesting thing is that most statutes for reserves and capital state that premiums are admitted assets. So if you're receiving tokens as premiums, then are they going to be admitted assets, viewed as admitted assets? And that's one of the issues that's going to have to be worked through. Certainly you don't want to accept tokens as premiums, have to change it into fiat, and then when somebody makes a claim, change it back into tokens to pay the claims. That's not going to make sense at all. So that's one of the issues we're going to look at, that regulators are going to look at. Another is corporate structure. Now, for most of the statutes, they're going to require a corporation be the owner of the insurance company. Hugh gave a very interesting presentation on Nexus Mutual. There have been some people who have raised the issue, is a mutual where all of the pool of assets is owned by all the members, any excess over administration costs are then paid back to members, is that really insurance? And on the other hand, looking at the statutes and insurance regulations, the statutes normally say a mutual insurance company has to be a corporation. Now, as I think was mentioned by some other speakers, the regulators like corporations because they know how they work, they know who's responsible. If something goes wrong, they know who to go to. And that's one of the challenges with a decentralized system, a DAO or a mutual, is if something goes wrong, you know, who is going to be responsible? How are you going to deal with that? Business conduct, as I said, that's one of the primary concerns for insurance regulators with regard to personal lines, in particular, protecting consumers. That's one of the reasons why the regulators at NAIC, as I said, refer to the insurance industry as the dark side. They view themselves as the protectors of consumers. They're there to protect them against the insurance companies taking advantage of them. And that's why they take that adversarial attitude. But again, as I said, it's much better if they take an attitude where they are going to work with companies. We've got a lot of laws and regulations with regard to business conduct. Marketing, a lot of the marketing is going to be online. You have a lot of state laws with regard to marketing. FTC, the Federal Trade Commission, has a web page involving international online marketing that lists a lot of the requirements that they have. In the EU, you have the Insurance Distribution Directive that is going to come into effect. It was supposed to come into effect February 2018. It looks like it might be put off till October 2018. And that's going to affect everybody. It not only affects the insurance companies who are using intermediaries and agents and brokers, but it also affects direct marketers. Now it's designed for a good thing in order to make cross-border sales more uniform, so more people can participate in cross-border sales. On the other hand, of course, they've got all sorts of regulations that they feel are necessary in order to do that. One of the requirements, the requirements primarily deal with conflicts of interest, anti-inducement regulations, and suitability regulations. Now with, for instance, with Know Your Client, KYC, AML, Know Your Client, anti-money laundering laws, in the United States, insurance is specifically exempted from the anti-money laundering laws, except for an insurance policy that has cash value, so an annuity or a whole life type policy. They're primarily concerned about anti-money laundering where it involves an insurance policy that's used basically as an investment vehicle where money laundering can occur. Fraud and privacy, of course, are big issues for regulators. One of the issues with fraud that occurs a lot with securities commissioners for the states is something to keep in mind with the kind of mutual or ROSPA type situation or a DAO where you have a group of people who are trusted as members and owners of the company. The fraud situation that often turns up for state and securities commissioners is what's called affinity fraud. And that's the kind of fraud where a fellow comes up to you and says, hey, we go to the same church together, we know each other, we have the same friends, I've got this investment that you might be interested in. Edmund and Bill are also invested in this. They go to our church too, and they get the people to invest and then they take the money. So that's something to be concerned about is, in setting up the group. In Europe, the right to be forgotten has now been put into law, and that can be a possible issue with blockchain insurance company because of the immutable chain. How are you going to deal with the right to be forgotten? And so that's an issue that's going to have to be addressed. Contracts, often, insurance contracts, particularly personal lines, contracts themselves have to be approved. They have to have certain clauses in them. Rates, again, government approval for particular lines of insurance, usually personal lines, and
what's the right to be forgotten?
The right to be forgotten. The right to be forgotten is fairly recent, where they determined that some people had, for instance, information on Facebook. And of course that's supposedly always there. You know, Facebook has it, they have it in the cloud somewhere. And in Europe they determined that a person has a right to go in and say, hey, I want that stuff taken out. I want that personal stuff of mine taken out. And they have that's called the right to be forgotten. You know, and so with the immutability of the blockchain, that presents some issues. How do you take them out? Rates for government approval, as I say, particularly personal lines, for consumers, regulators often have to approve the rates. They approve how much is going to be charged. Claims processing also is subject to government review. There's a uniform claim processing law, and one of the areas that is particularly a concern for regulators is the delay in the payment of claim. Consumer comes in and complains, hey, I submitted my claim 6 months ago, the insurance company keeps giving me the runaround and isn't paying the claim, you know, what can I do? And the insurance regulator will look into that. This is particularly an area where a blockchain, decentralized insurance company can show the insurance regulators that this is a much better way to go. because the claims are going to be processed much more efficiently through that process than they tend to be under the traditional process. Rates also, as you know, the prior speaker here on predictive markets and as a number of other people have talked about, in order to determine rates with the Internet of Things, with trusted oracles, with the ability for the blockchain to get better information in order to make better decisions on what the risk is, and therefore a better decision on how to price the risk, that can be beneficial as well. So there's, you know, as I say, there's a variety of ways that you can approach the regulator to let them know that by the very fundamental structure of blockchain, it will actually be beneficial to them. Reporting is another area. Insurance companies, of course, have to file quarterly reports. They've got to file annual audited reports. They have to file a report on their rate showing the actuarial evaluation of it and the underwriting. And on the blockchain, they'll have real-time view of the financial position of the company and how they're dealing with their customers. So that's something that's going to make their job easier. Blockchain insurance use cases. Private internal uses, you know, EEA and B3I are working on internal uses to make their processes more efficient. I think for a lot of us here, we don't care that much about what the big guys are doing. You know, a lot of us are looking more at the peer-to-peer type of process. But I think this will be very important to everybody because the large insurance companies that are involved in these consortium working on blockchain solutions are folks that the insurance regulators are used to dealing with. They're used to dealing with, they have a long relationship with them, and so as they're working with them, they'll get more comfortable, they'll get better educated on what we're talking about, and that should redound to the benefit of folks who want to do a more democratic, peer-to-peer type process. The internal uses, as was stated by one of the speakers, they predicted that it can reduce costs 30-35% for insurance companies, which hopefully at least some of that will be passed on to the customers. We'll see. It provides better customer ID. The consortium can use their Know Your Client databases, combine them together to provide better customer ID. Smart underwriting, as I said, with the information of things and other areas of information that they'll be able to tap into. The record keeping, of course, payments, claim processing, and reporting. All of these, they feel, will benefit from using the blockchain, and they probably are right. Public use cases, parametric insurance. Parametric insurance is one of the easier types of insurance for regulators to regulate, because in parametric insurance you have a set event. If that event occurs, the person gets a set amount of money paid out. That's your standard parametric insurance. And so you don't have to do the damage evaluation that is normally involved with claims and other aspects of that. There have been several folks, looking at parametric insurance solutions, and a lot of these that I've listed here, could fall under several of the categories or all three. But of course, Etherisc and AXA has Fizzy with flight insurance that they've tried. peer-to-peer insurance, again, Nexus Mutual, iGain with the DAO, Dynamis and Lemonade have approached that. With microinsurance, Trady and Consuelo here in Mexico, I believe, which is also a parametric type of insurance for life payments there. So, one of the first issues that you're going to want to take a look at in setting up a company is jurisdiction. The issue of jurisdiction, you want to be in a friendly jurisdiction, hopefully where the regulator has some understanding and is friendly towards the blockchain. But also, there's the issue with jurisdiction for customers. On the blockchain, you can have customers anywhere in the world, right? Some folks have said, well, then none of the regulators have jurisdiction because they have customers out all over the world. Well, no, actually, probably each one of those countries or states where there are customers will look at it as their jurisdiction. I said earlier, Hugh, had very good arguments on the Nexus Mutual and how it operates, how it's not really an insurance company, it's a mutual set up under the laws there in London. If they have customers around the world, if they have, say, 1,000 customers from New York, as well as other places, and 100 of those customers go to the New York Insurance Commissioner and complain that they don't like one of the decisions on the consensus, or they don't like something going on there, the New York Insurance Commissioner is going to say, I've got jurisdiction, I'm going to look into this, at least to look into it. Now, as I said, Hugh has some very good arguments there, but one of the reasons why you want to work with your insurance regulator and educate them is that some regulators can be real ass, I don't know if I should say that in polite company, but some of them can be real butts, okay? And you come in with very good arguments like Hugh has, or others explaining to them how this works, how this is going to benefit consumers, how it's going to benefit them, and they can say, I don't care, I disagree, I'm going to enforce this particular law, which is basically going to put you out of business. Now, your only alternative at that point is, well, you can go into court and you can sue them, but, who wants to do that? And the likelihood of winning is usually fairly slim. So it's much better to start out from the beginning, working with the insurance regulator, establishing a good relationship, educating them on how this benefits them. Public versus private, as I said, the private internal blockchains are not going to be subject to such high scrutiny as the public is, where the insurance regulators are more concerned about protecting consumers. Size, if you're small, the insurance regulator might say, well, let's wait and see how this goes. Unique coverages, that's a good thing. People who don't normally get coverage are going to get coverage. And then, take a look at the regulatory sandboxes, innovative hubs. A lot of jurisdictions have started setting these up, and of course that's a very good way to work together with the regulator to try to educate them and to try to see what is going to work and how these laws can be changed to make things a little better. Insurance regulation on the blockchain. I've gone over a lot of issues. There's lots of regulations, and a lot of areas where it doesn't quite fit. But in working with the regulators, adjusting the law to a certain degree, I wouldn't go in and tell the regulator that, oh, we've got to make a big change in the insurance regulation laws to deal with blockchain, because the insurance regulator is going to hear that and they're going to think, that's going to be a lot more work for me. And insurance regulators don't like a lot of work. They like you to do a lot of work, but they don't like to do a lot themselves. So the fact is, a lot of the structure is fine, but it's going to need to make some adjustments in order to better address the blockchain. And if so, it can be a win-win-win, a win for the regulators, a win for the companies, and a win for consumers and customers. So, okay.
Thank you.
Questions?
Thank you, JP, for ending this win-win-win. Now, this is your chance to ask a question to regulator. Any questions from the audience? Yes.
Specifically, what are the rules which are waived in this sandbox that you know of? Like, for instance, like the FCA in the UK.
What are the rules in the sandbox?
Yeah.
Well, it depends on its jurisdiction and how they set up the sandbox. Arizona is a state that has indicated that they're going to be quite friendly to the blockchain and have set up the sandbox. And some of the sandboxes, you can work with the regulator and they will not apply some of the laws and regulations that would normally apply. In some of the sandboxes, they say, no, you got to abide by all of those, but we will work with you to set it up so that it is in compliance with all these laws. The regulator in London has set up Sandbox France just recently set up a sandbox or innovation hub, sometimes they're called Unicorn. There's numerous jurisdictions that have recognized, look at this is coming down the pike. We need to understand it. It's going to have a lot of benefits, but we need to understand it and how to work with it. So, yeah.
Any more questions? Yeah.
But just perhaps a bit more insight on the FCA one, because I talked to them for 9 months. They can waive some of the consumer protection side of things because that's under like local guidance and things, but they can't waive law. And insurance is law in the UK, so they often can't give you a pass on anything core, but they can give you some passes on things like, oh, you need approved people to sell this type of product, or you need to disclose this information to the client. So they can do some good stuff, but when it comes to insurance, they haven't got a lot of flexibility.
They can also give you temporary authorization to a specific role, like broker insurance, under certain limits. Yeah, so you basically negotiate with them the limits.
And I think with the sandboxes, again, they were not set up for insurance. I mean, they were set up for blockchain in general. Often their main focus is finance regulation, and we have to educate them that insurance is an area where it's going to be very important as well, where we can work through a lot of these regulations and find better solutions.
So now I'm in a kind of conflict of interest, because if I ask one more question, I get less time to speak myself. But one more question here. You say go educate those regulators. Yeah. Which ones? You know, if I offer a product that's running on blockchain, I'm international by default. Yeah? So one of the big challenges that we see is we can't afford, an insurtech startup can't afford to go one regulator by each. So how do you see this dilemma between local regulation and international reach by default?
Well, that's why I had the slide about the International Association of Insurance Commissioners and the NAIC, because there you get them all together. And at a 4 or 5 day convention that they have, you can attend, you can get around, and you can talk individually to a number of regulators there. But you also can get IAIS to have a better understanding, to develop model laws that you can then present in whatever jurisdiction you're in, to let them know, this is the way it really should be done. Model laws are best practices. this is what you should adapt and put into your law.
Thank you so much. Another round of applause for JP. Thank you for your contribution.